Hello, everyone. Thank you for tuning in for our market review slash preview. And yeah, I mean, pretty crazy stuff going on these days. And there's something else going on that leads me to be bearish. All right. But we'll just talk about that in a second. So here's our S&P. Not surprisingly, this kind of stalled out right where we thought it would. This line here that we put in a few days ago is 523.50. And the reason why there's resistance here is because it was the top over here. Markets tend to run into resistance at former tops because people that bought at the top the last time, when the price goes down, they say, I made a mistake. If it gets up to where I can get out at break even, I'm going to. So remorseful buyers from here, placing sell orders here, creates this resistance. So I don't know what the hell these people are talking about. Now, this article came out today, and and so Bank of America puts this out. They talk to the fund managers. So fund managers now are as bullish as they were back in November of 21. Well, what was November of 21? That was right before the market peaked. I remember we went into that big sell off in early 22. So this is a basic supply and demand type thing. If people are overly bullish, what do? They invest their funds. Once they're done investing funds, there's no more funds to invest. The market can't go any higher. A market needs buyers to push it higher. If it runs out of buyers, it's going down. Now, this is what I think is utterly preposterous, which I have no idea what the hell these people are talking about. More than 4/5 of money managers, and this shows you that just because someone's a money manager doesn't mean they know what the hell they're doing. More than 4/5 of money managers expect the Fed to start cutting interest rates in the second half. This is just regurgitating a mantra. All right. There's no way they're going to cut rates. And if they do, it would be a huge mistake. Let me just show you some of this stuff that I'm looking at here. We talked about this yesterday if you were here. This is our ISM monthly report in the service industry, or the service part of the economy, which is 80%. Prices were up 5.8%. I mean, that in 1 month, that's a lot. What about in the manufacturing sector, which is about 20% of the economy? The inflation here up 5.1%. If you go down here, this is a really cool report. It's free, and it's not trying to sell you anything, so they don't have like an opinion. But right before that, the inflation really heated up back in early 2022. A couple months before that, all of the commodities that they follow, every single one was up in price. They probably follow about 100. So if something hasn't changed, I guess it's not here. So the only thing that was down was propane, but a bunch of these guys were all up. Food and beverage, as we know, fuel. Um, Now, here's a couple other things to tell me that make me think inflation is going to really accelerate as we go into the summer. Let me look at the price of copper. Okay, just skyrocketing. Then you got these food commodities just skyrocketing. Look at wheat. All right. And this hasn't trickled through to the grocery store yet. If you think you're paying a lot for groceries now, stock up now, man, because in a couple of months they're going to be a lot more expensive. This stuff hasn't even really kind of fed its way through into the market, and this is a result of government spending. And apparently, it seems like the government is going to keep spending because they're either really dumb or they're oblivious or they don't care. I don't know what it is. It's really, to me, is unfathomable that you can have such incompetent people in such important positions. There's an old expression on Wall Street: it's better to be lucky than to be smart. And there's a lot of incompetent people in important positions that were lucky and they're not smart. All right. I wish I was one of them. But all right. Anyway, um, another thing that leads me to be kind of bearish is this whole meme thing that's back on here. These GameStop. These people that trade GameStop are the worst traders I've ever seen. All right, they're not traders; they're gamblers. This is not follow. Well, it kind of follows the normal rules of trading in some ways, but in some ways it doesn't. Because at any given moment, the stupid roaring kitty could come along, or who the hell knows what the next one is? Fuzzy elephant, Uh, I don't know. I can't even think of. How about Vicious Rabbit, like the rap guy, Bad Bunny, which I think is kind of ridiculous because bunnies are cute and fluffy. I thought rap guys were supposed to be hardcore. Um, but yeah, so I got to come up with a handle. Why don't you guys let me know what it could be? All right. So anyway, just let me just show you on GameStop here. All right. In the pre-market, this thing was trading at 70. And in my morning call, I'm like, buy puts, man, buy puts, buy puts. Look at where it closed, 48.75. Because this is what I was kind of talking about, but on a smaller scale than the broader market. You get all these meme traders that throw their money at GameStop, and when they run out of money and the price stops going up, they're like, "Uh-oh, I better get out." But all the people that wanted to buy have bought, so they have a hard time bailing out on their shares. So look at the way this trades, right? Every time we get some kind of a big move, it's an overreaction followed by a reversal. Overreaction followed by a reversal. Overreaction followed by a reversal. All right. Now, let me say something else while we're on GameStop. As someone who was a market maker for 2 years, okay, like me, and as someone who oversaw the trading of probably 12 or 15 different hedge funds at the various money managers I was at, I can tell you wholeheartedly with 100% certainty that market makers and hedge fund traders do not really care about what retail traders are doing. And they're not going out there and trying to rip them off. So if you lose money on trading this, you should ask yourself, what did I do wrong instead of blaming someone else? Good traders accept their mistakes and try to improve from them. Bad traders blame someone else for their mistakes. But look at some of the stuff that we talk about here with our important price levels. Look at where we kind of stalled out today on the upside. Same price levels that we hit resistance back there. We just talked about how there tends to be resistance at former resistance levels. Today's low trade, or the closing trade, I should say, was right about 47.48. Look at this, 47.50. So this was resistance back here. So this could be the opposite. People sold back here, and when the price blasted off, they like, oh God, I shouldn't have sold. If it ever drops back to my price, I'm buying my shares back. So it's really not a coincidence that there was resistance up around here because it was resistance before. And it's really not a coincidence that we kind of found support around a level that was resistance before. So resistance can stay intact because of buyer's remorse. People bought, finally gets to their price, they want to get out at break even. All right. Remorseful buyers placing sell orders could form resistance. There could be support at former resistance levels because of seller's remorse. People sell, price goes down, price finally goes up past their selling price. They say, if I can get this thing back at the same price I sold at, I'm going to. So even with all the hoopla and even with all this stuff going on around here, we're still seeing the same principles that we talk about over here. It's like, what are the important levels? What are the important trends? What's the momentum? What's the psychology? All right, now let's go over to a real stock, Microsoft, and just something you should really kind of focus on here over the next few days. Sometimes the market gets to a point where you can get really good insight into what's going to happen in the broader market just by watching one or two things. And I think really kind of the important thing to watch now is two things. Like, what happens with Microsoft? This is still the biggest stock in the market. I mean, I know GameStop, the meme stops are all in vogue now, but I can't see the market moving ahead in a significant fashion if Microsoft doesn't break back above this. Now, this is buyer's remorse manifested in a different way. Here, support becomes resistance. People that bought here regret doing so when the price goes lower. They say, if it ever gets back to the price I bought at, I'm going to sell and get out at break even. So remorseful buyers placing sell orders can form resistance at a level that was support. All right, so thanks everyone. Please make sure you join our community. We have a morning call every morning at 8 where we talk about the market with a bunch of our members and so forth. And we got some institutional followers that I consult for. Yeah, that's it, everybody. Hope you have a good night, and I will see you all tomorrow.